Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the FX majors and the dollar index going into the week 9th of September 2019. I'm going to start off with the dollar index, then break down the other currency pairs, highlighting chart formations, our bespoke support and resistance levels, basically where we're looking for the currency pairs to go this week. So we're going to start off with the dollar index. This is the daily chart. Here we can see we've had some pretty mixed volatile trading for the last 96 days. Looks to be forming an ending wedge pattern. We've got an evening doji star posted from the high, or an evening star I should say, not a doji star. That candle formation often indicates the end of a trend and the start of a new downward bias. Now, if we break this trend line support, which is around about 97.60, then the measured move target is down here, 95.84. So at the moment, we're looking at selling into dollar rallies and looking for that pretty aggressive breakout normally to the downside. So if we reflect that back onto the FX majors, euro, dollar, here I believe we've made the first bullish Elliott wave count to the upside, so wave 1, wave 2, 3, 4, and then up in 5, and then we're correcting lower. We've got some bespoke support located today at 98 the figure, and that's just below the 61.8% fib level. If we go to cable, decent move to the upside. In fact, if we just go to the weekly chart, we've posted a bullish outside candle on that weekly chart. Now that often indicates the end of a downward trend and the start of a new upward bias. So going back to the daily chart, we've got some trend line support or reverse trend line support located at 122.02. We've got our bespoke support located at 122.05. Obviously cable, or not just cable, but sterling in general, with Brexit, etc., is extremely volatile, but this offers quite a good risk reward setup today, buying into a mild dip with a measured move target for this wedge breakout being up here around about 127.65. Dollar Swiss, again mixed volatile trading. What we have got is we've got what looks like a bullish rising ending wedge pattern. We are close to a DMARC exhaustion count on the daily charts, posting an 11 today. A 13 normally indicates the end of a trend and the start of a new downward bias. So opposite to what we're seeing in euro dollar looking at buying into dips, dollar Swiss we're going to be looking at selling into rallies. Our call is to get short around about 99.57 with a measured move target down here at 97.13. So again, trying to get in at these extremes does offer a pretty decent risk reward with a risk reward factor of just over 6.5 to 1 there. Dollar yen, we've seen some pretty mixed volatile trading. Looks to be forming, or potentially forming, a bullish reverse head and shoulders pattern. So this would be the left shoulder, this would be the head, that last spike to the downside, and then possibly coming lower to form a right shoulder. At the moment, we've got some bespoke resistance located at 107.35. We've got that 38.2% fib level located at 107.48. So today's call is to get short to possibly form the next move to the downside and that right shoulder for that bullish reverse head and shoulders pattern. Dollar CAD, we've seen an aggressive move to the downside. The weekly chart has highlighted a bearish outside candle, so obviously that often indicates the top of a trend and the start of a new downward bias. There's really no clear indication that this move lower is coming to an end. The weekly chart also offers an expanding wedge pattern that has a bias to break to the downside. So all these different time frames highlighting the bearish bias for dollar CAD. Today we've got trendline resistance, our bespoke resistance at 132.40. We're looking for an aggressive move to the downside with the 423.6% extension level located at 130.89. Got to remember this is a commodity currency. The wave extensions often extend to that 423.6% fib level. Aussie dollar, again, we've seen a really good move to the upside now. 4 days of solid net gains for Aussie dollar. We are looking slightly overbought, slightly exhausted. We haven't got any exhaustion counts on this chart formation with regards to DMARC. What we are looking for here is an AB equals CD corrective formation. So this is AB and then possibly CD. Now we've got a 61.8% fib located at 69.27. I think our bespoke resistance is at 69.35, so pretty solid upward barrier around that level. This week we're looking to get long close to 168, sorry, 0.68 the figure, which is our bespoke support, and also close to the reverse trendline support from this triangle breakout. Euro sterling, we keep on grinding lower. We got an inside day on Friday. That just highlights indecision. This is a high risk trade. Obviously, again, with that sterling element in this cross currency, but a full AB equals CD formation takes us down to here, which is around about 88.40. Now we've got some bespoke support located at 88.45 and 88.25. So there's a lot going on down there, and that's got our main focus is for a further drive down in euro sterling when we see limited selling in sterling dollar, and obviously a deeper correction to the downside in euro dollar. So correlated, it still looks like euro sterling has further to go. Today we've got bespoke resistance located at 90.20. Euro yen, and again we broke this wedge formation to the upside. That's got a measured move target of 119.58. We're possibly forming a reverse, a bullish reverse head and shoulders pattern, so left shoulder head, and coming lower now to form the right shoulder. Even though the right shoulder is located, or potentially located, at 117.10, we don't have any bespoke support until 116.98. So what we're looking for is a spike through that support level for the then, hopefully, the next drive to the upside. Okay, guys, I hope you've enjoyed that analysis, and we'll be back again soon with some more.